Welcome to the Real Estate Investor Podcast. I'm your host, Gary Lipsky of Break of Day Capital. I talk to leading experts to discuss a wide range of subjects to educate investors on best-in-class practices to build legacy wealth and positively impact communities. Let's jump in. Hey everyone, welcome to another episode of the Real Estate Investor Podcast. Today on the podcast, we have Joe Rinderknecht. Joe is the founder of Upgrade Partners Capital, a fund of funds, and Cowboy Capital, a real estate investment firm specializing in value-add multifamily properties. Most investors rely on gut feelings, shiny brochures, or hype, and that's exactly how people miss red flags and lose money. At Break of Day Capital, we do things differently. We help investors make smarter decisions before the deal ever hits your inbox. From our educational webinars to our Invest Smart book to real tools like our portfolio tracker, we're here to give you the edge most investors don't even know they need. If you've been valuing our podcast and want to take the next step, subscribe to our newsletter. You'll get early access to webinars, new investor tools, and market insights sent straight to your inbox. Break of Day Capital, because smart investing starts before the deal.
Financial advisor Bromley Palamountain of Northwestern Mutual empowers people to make their financial dreams a reality through purpose, clarity, and design. Be sure to check out his links in the show notes. Joe and I met probably about 5.5 years ago at a fundraising conference, and I'm happy to have him on the show. So welcome to the podcast, Joe. Can you start by telling the listeners a little bit more about yourself and what you do?
Yeah, thanks, Gary. And been feels like it's been a long time, but really not that long that we were in Denver and met you and Kyle, and now we're a part of what Ryan Miller's Fundraise Capital Group, which is a really top tier community. So, but yeah, thanks again for having me on. So yeah, for those who don't know me, Joe Rinderknecht, and if you can see me wearing a cowboy hat, it's really who I am. I grew up ranching and farming in northern Utah. My grandpa still runs that ranch today. Have a couple uncles that live on that ranch still. So from, grew up ranching, got into construction with my dad through, my dad's always been in construction as far as I've known, building cabinets, trimming out houses. So I was able to get a really good, experience level with hands-on, construction, I've done everything from concrete to framing to all the way to trimming the house out, so I got a good breadth of experience there with construction, which I'm sure Gary and I will talk about, which is super helpful when it comes to asset management, your roles there. But so got into that, and then about 2014 is when I really started to want to learn about entrepreneurship and real estate. And so I was going to school at Utah State University in Logan, Utah, got into their finance program and actually got a minor in entrepreneurship and real estate as well. But I bought my first duplex in 2016. That was more of I just kind of got into the real estate more out of need than anything. My wife and I had been living for a year with her parents and working for them. I was driving semi at the time. So I drove semi from 2015 to 2018 and just did as much real estate as I could, learning while I was over the road. And so bought our first property 2016, then bought a fourplex in 2017 that we sold last year. So we held that for 7 years. Probably still one of my best deals to date. And then really got into wanting to learn as much as I could about commercial multifamily, because although I had done a handful of fix and flips, wholesales with duplex, fourplex, I realized I was under contract on a 44 unit, and it was from another ranching friend. It was a connection of my great uncle, another rancher who owned this property. And I got a budget from a commercial property manager, and they're like, hey, you can increase other income by $120K a year. Right. And that blew me away, because it's there's no way I could even get close to that on a per unit per year basis, which I think is about a little under $3,000 per unit a year. you can't do that like duplex, fourplex. And so it just opened my eyes to what could be done with commercial. And from there, I kind of went into more of the apprenticeship role for the next couple of years, and learning. So that same property management company that gave me that budget, I actually went to work for them a couple months later. I didn't end up getting the deal. You ought to see that OM that I put together and how I was trying to raise money, because it was really, really bad. It's really funny to go back and look at that now. But yeah, I went and worked for this property management company, and I worked at an 80 unit LIHTC property, LIHTC Section 42, which, if any of you know, if ever dealt with LIHTC, like usually they're pretty rough. Heck, I didn't even know that there were drugs and cockroaches in Utah until I went to that property. And I've got, fun stories. The one I like telling the most is like, we had a partner with the local police department, or they have what's called a strike force typically within within their police department. And we ended up doing I don't know if you want to call it a raid or just what I think, can't think of the term, but anyway, our maintenance guy was dealing meth and doing meth in the maintenance shop, and we owe a sting operation on him because we like set up hidden cameras that he didn't know about. So it was really cool because we got that property really cleaned up, fixed the vacancy, fixed the delinquency, fixed the drug and crime and the cockroaches. And I mean, that's how I really cut my teeth in commercial, is through that property and property management. And then from there, went and worked for a couple operators around the country. Um, Gary, you may even remember like Obsidian Capital, David Tupin, those guys. Like I worked for them for a couple of years, pretty much doing, sourcing deals, underwriting, some asset management. Then I worked for a group in Vegas and a group in a developer in northern Utah. So I through that, it was like from 2018 to 21, that 3 years, I didn't buy a single property. I just, became a, learner, as, by doing as much as possible. And I feel like that really has set me up to where I am today. And 21, bought my first bigger apartment complex. Bigger, right? Subjective. It was a 24 unit that we turned into 32 units. It was a 1951 build. And I cut my teeth on, I got another college education through that property, with interest rates doubling, tripling overnight, construction costs increasing. Yeah, we sold that property in 24 and were able to get investors 100% return of capital, which is better than some can say. We still felt like it was for sure a win, even
Right.
even though it was not the greatest property in the world. And then to now, it's just like the last 12 months, my partner, Levi Allen, and I have bought 4 deals in the last 12 months. And it's 419 units across the 4 deals. And, we're really looking to continue scaling and growing. So to
Yeah,
add,
a lot to unpack there, but I love your journey because I mean, anyone can make it in real estate, no matter what background where you come from, whatever, and you really, cut your teeth by doing the hard work and learning before jumping in. And obviously, I mean, the last year for you to close on 400 and something units is a huge win in today's market. Raising capital, finding good deals. You've really done it. A very one step at a time. Whereas there's so many people that have come in the last 7, 10 years that just try to leapfrog over the steps and not have a business background, or not knowing how to do the things that you've done. So really impressive. um, a lot of people, when they get into real estate, have kind of analysis by paralysis. Was that something that you had, and if so, how did you overcome that?
yeah, I totally had analysis paralysis. I was always worried about doing the wrong thing and getting into a bad deal. And so I think some of the ways that I got over that is like I would get analysis paralysis when I say I got a deal and I spent hours or days or weeks underwriting it, trying to get every piece figured out, right? Like my partner and I at that time, we literally lost a deal because we took too long underwriting it. You know, there's a saying like time kills all deals, and it was especially true for that deal. So the way that I was able to, in a way, get over that analysis paralysis was to be able to, like, if a broker sent me a deal, or, I did a lot of cold calling. Like, I did a lot of outreach myself to kind of learn the business as well. I went and knocked doors on multifamily owners and cold called, for sell by owner, for rent by owner. But I think the simplest thing that you can do to overcome that is all you need to underwrite initially is a rent roll. Some people think they need rent roll and T12 and like they need to figure out like what the seller has or hasn't done. I think for initial touch, like you can take that rent roll and see what their gross collected rents are. And then you can assume a vacancy number. You can assume an OPEX ratio. And then you can find your NOI and figure out what that price is on a cap rate basis. But you can also do that on a pro forma. You can be like, hey, if rents are 700 and I can get, 800 just pushing the market, what does that do to my NOI? If I go in and renovate, 5K, 10K per unit, and I can get a $200 premium from there, what's my ROI? And what is that gross? So it's like you can do those quick numbers even from just a rent roll, because most of the people we've done deals with have been kind of your do-it-yourself landlords, 10-year plus owners, and sometimes a rent roll is all you're going to get for the first little while. So I think that's like an easy way to kind of get over that analysis paralysis, is to do a quick 10-minute, on the napkin underwriting, just throw it in a spreadsheet really quick. You don't need your institutional level or, but it's like when you go under contract or you get close to a contract, then that's where you really do need to dig into it and start finding those factual numbers of how it's operating and whatnot. So I feel like that one is. And then a second piece of advice here is just freaking taking action. I think when we have analysis paralysis, I think this can be like if there's a task that seems daunting, even if it's a task or underwriting, like the best way to overcome it is just to do it. Action is the best, medicine for overcoming fear or that mindset. So
100%. I was reading your bio and I read that you look for properties within a 4-hour drive of where you live. And so you cover quite a diverse range of territory, including Montana, Idaho, Utah, Texas, and Ohio. So,
yep.
How do you, after that criteria, how do you narrow it down of what you're kind of looking for,
Yep. So the main areas that we invest in or that we purchase in is Montana, Idaho, Utah. So I live in eastern Idaho and I'm actually like a block away from my partner, so it makes it really easy. So we own a 54 unit and a 25 unit in Missoula, Montana, both of which we bought in the last year. The 54 we bought September 30th of 24. So and then we have a 48 unit in Boise, Idaho, and both of those we can get to in 4.5 hours. And Levi and I, like he's from Oregon, he's got about 600 units in Utah with, just stuff that he's bought and with his family. And like we both just kind of started, where we were at, which is like Utah, Idaho. And, these deals in Montana are the first ones. But, we got to know those markets so well. And Levi, like he and I have a really great partnership because he built a lot of really, really good relationships with brokers as he was getting started. I didn't. So it's like the Boise deal, it was a call from the broker saying, hey, we know you guys can execute. We know that you can make things happen. Here's this deal that we want you to have first look at because it's perfect for your criteria, which is like 50 to 100 units, 80s vintage and newer, light to medium value add, which is probably what everybody's looking for, right? Um, and so we just made ourselves like very known in the multifamily community that like we're really good at doing stuff locally. And I know so many operators in Utah, and like mainly Utah is where I know most of the multifamily guys, but they're operating in Oklahoma or Ohio or Georgia, and it's just like I we just bought our first deal in Texas about a month ago. Um, like it was the first one that like I had ever bought out of state of kind of like our boundary. And I think the main reason too, like those three states, just because like we know those markets like the back of our hands, right? Because we've been studying them. Like the Missoula market, we've been trying to buy a deal there for 4 or 5 years, and for good reason, right? We bought that 54 unit for 6.8 million. We renovated 20 units at a time at once, and we have it on the market right now for 11.8. Right, like
Nice.
the market's blowing up. It's doing really well, and then so once we feeling really good about our local markets, our bread and butter, it's like, hey, we can start branching out to bigger deals. And then we found a distressed seller of a deal in Texas whose entire portfolio is going under right now. Levi happened to be an LP, or like more, I guess LP in another deal that was going under, and he was trying to make some things happen for it not to go under, because it had ended up being a complete like wash of capital when it sold. We got in contact with one of the biggest investors of that group, and he's like, I wouldn't try saving this one. I've got this other one that you should try and save. And so we did. We were able to buy it for like 6 million less than the seller's cost into it. So the seller bought this deal in 21 for 25 million. It's 292 units, 82 vintage. We bought it for 21 and a half. But the seller put in, I don't know, million and a half into it as well. So that was a great deal. So,
Nice.
and
Yeah,
that
I
just
love
like,
the
I'll
sorry, go
just
ahead.
mention, like you mentioned Ohio too. I also have a fund of funds. So I'm just a passive investor in that Ohio deal, and have a passive deal in Texas too. So it's like I wanted to lift up the hood of other operators' operations. So I started my fund while I was going through that really tough deal from 21 to 24, because I couldn't operate anymore while I was running that deal. So like raising capital for other people who were really, really, really good at what they did was like the next best thing to do. So
I love it. And nice. And I love your focus too, because I do see people chasing deals all over the country, and it becomes really, really hard. You can't be good when you're focusing on so many different markets, but focusing on a few markets and building up, like you said, all those data points, so if a deal is good or not, gives you a huge advantage. It's funny you mentioned some people in Utah chasing deals outside. It's funny how that works, where you think for you it's a great market, and someone else is like, oh, this is like,
yeah,
I'm looking at deals halfway across the country outside of an area. So
yeah,
everyone has their different criteria and whatnot.
for sure. When Utah's naturally, like Utah, Idaho, and Montana are naturally a more expensive market, right? Like you can
Yeah.
go buy the same thing in Ohio for half, probably, right? And so that's like why people don't love investing in Utah, but it's just like we've got stellar deals. Like, that Boise deal was like 140 something a unit, and most of the deals right now are trading similar, like a comp is like 180 plus, right? So we've just gotten really, really good deals too. And the Montana deal we bought for the first one, 54 units, 126 a unit, and a 25 unit we bought for like 110 a unit, which those are really great purchasing numbers on the Mountain West. And they're not like highly distressed, huge renovations either. So
So before we started recording, we talked about my love language, asset management. How did you get into asset management, and how did you? There's no training course out there. I wish people. We talked about people talking about asset management, and no one does. So how did you gonna get into it and learn the ropes?
yeah, oh, good question. Yeah, it's my love language too, Gary. I love asset management. I think I think it came a little bit more natural to me, like the love of it, because like when you run a farm or a ranch, like if you don't manage the cattle, they're gonna die and your lifestyle dies, right? And so I kind of liken that to asset management is like if you don't manage the property manager, if you don't manage your general contractors or the service providers or whatever it may be, like your deal would die and therefore your reputation and the trust of investors dies with it, right? And so I think I first really started understanding asset management. I mean, being a property manager definitely helped in understanding like the intricacies and what all is at play when dealing with a property. You got financials and leases and like a property manager has like a dozen different jobs, right? It's kind of crazy. But I think it really clicked is when I think it was 2019. I went, so David Tupin had a event or a trip called Secret X, and we went to Aruba. And I went there and, met his partners, Glenn Gonzalez and Mike Woodfield, and I met, Ben Suttles. Like most people probably listening to this know Ben Suttles with Disrupt Equity, and Ben, I think, is also a master of asset management, right? And so, like, one thing I remember from like the event that we went to in Aruba, and just talking and building that relationship with Ben is just like there's such a deficiency out there of people that understand asset management that if you can add that value to the marketplace and to other operators, like you're extremely valuable. So like my property management experience, my construction experience, like all helped me be able to kind of step into that role. And like when I got back from Aruba, me and a couple guys tried to start like a course we call it the asset management I can't remember. It was an asset management course. It did, and we had like guys like Tim Bratz and Neil Bawa and Vinny Chopra and all those guys that had like an hour segments. We didn't have enough experience in launching a course, and it died, which sucks. But I have all those recordings still, which is to my benefit, I guess. But I just like really started understanding because it's like there are hundreds and hundreds of seminars on raising capital, finding deals. Guess how many seminars and events there are on asset management? I don't know. I can't find any. you
Well,
know?
besides the two summits I ran and my book, but yes,
Yeah.
after that, I don't know of any others.
Yeah. I just got your book, by the way. So thank you.
Yeah.
I'm gonna have to check out your asset management because I'd love to go to more of them. Right? I wish there was more, and I wish that people understood how important asset management is because like capital raising and finding deals is so sexy. I don't know. I think, maybe you and I are the weird ones where it's like, no, asset management is actually sexy. It's numbers and dashboards and trends and, you know, because it's all about like stabilization at first, which is, your construction, you're implementing your business plan to once you're stabilized, then you look at maybe a refinance and getting it more cash flowing all the way to doing a disposition, right? It's like that full life cycle of a deal is like 2/3 asset management. And I don't know. I love numbers. I love dashboards. I think like right now, if I could just focus on one thing, it would be like to build out, like spend more time building out my asset management and all the dashboards and KPIs. Um, but I think it's just so dang important that if anybody's new listening to this, like there's still so much there's a huge demand for people that understand asset management. And it's just like, get on podcasts like Gary's and listen to his stuff, because he's got professionals on here that are good at it. Read books, listen to YouTube University, because there's not a ton of events out there. So guys like us who got started without a lot of presence in the marketplace, like, had to do the YouTube University and podcasts, and just flat out doing it is really the way you learn asset management, is just sometimes getting your teeth knocked in and standing up with a toothless smile and moving forward.
Yep. Yeah. I mean, I had, really no formal experience from the real estate side. I mean, I had a couple of, single family, but it was really, I was always an entrepreneur. And so I was able to take those skill sets and apply to asset management. And we're constantly learning and evolving and doing things differently, all the time, because it's constantly changing and whatnot. But staying on top of it, those few extra percentage points of economic occupancy, it's just all profit, all goes all to your bottom line, to your investors. And that it's such a huge factor. And those that are really, really struggling with deals out there, weren't, most of them weren't focused on the asset management side.
Yeah. Yeah.
So I got one last question for you. I know you're involved in a nonprofit called Tiny's Tribe, supporting families affected by life-changing accidents. Really honorable. How did you get involved? And tell me about maybe a recent story.
Yeah. So Tiny's Tribe is my own nonprofit. To make a really long story short, I was in a car accident back in 2013, and from that car accident, I lost my little brother and grandma. And I wasn't living like life to the fullest, or I wasn't living life on my terms at that point in my life. I was very much a yes man, would do like what other people wanted me to do. I was actually going to college to be an X-ray tech because my parents said it was a safe, secure job at that time, right? But my little brother, he's 22 months younger than me. He had just turned 21, and I was 22. Um, and he went after life like unapologetically. He could give two craps about what other people thought about him, and if he wanted to achieve something, like, he would go all in on making it happen, right? And so after that accident, I decided, like, okay, this is my second chance at life. I got another chance. So it's like, I'm going to take those attributes from my brother and go after the things that I want. And that's actually when I got started into like entrepreneurship, because that's what I wanted to do. Now, where Tiny's Tribe comes from is, so Tiny was my brother's nickname, and Tribe, you know, it encompasses community, the people around you. And like, I would not be who I am or where I am today if it wasn't for the community, friends, family in the area. Because it's like, I was in the ICU for like 10 days because, I was pretty beat up. They didn't think I was going to make it. But like, when you have friends, family, and community, like paying for your hospital bills, your brother and grandma's funeral, her life flight, and I probably lost sleep because of the number of people just coming to make sure that my family and I were fine, during the days. Because like, when you have traumatic incidents like that, you can either get pissed off at God, get pissed off at the world, and go down a very dark path, which I've heard stories of people doing that. Or you can take it and have an optimistic look on life and be like, okay, I'm going to change my life for the better. And so that's really what Tiny's Tribe is. That's what I created. We help families who have been in some kind of tragic incident or accident resulted in death or severe injury of, somebody within the family, right? And the main four ways that we help these families are: one, financial. They're kind of the core areas, the core things of life. Financial, of course, paying for, whether it be hospital bills or, funeral costs, or just daily living, right? Because if you have a breadwinner that gets in an accident, then how do you provide family, right? So we raise money to help those families. The second one is construction, right? I got a lot of construction relationships. And so like we've gone and built like wheelchair ramps, and there's a group out of Utah where we've gone and renovated entire homes for families, right? That need different things, or like even an update to the home. Third thing is food. Um, Also with my ranching background, have relationships in the beef industry. So we've given away like half a cow, pig to like each recipient that we've worked with in the past. And like a half a cow can feed a family for over a year, right? It's crazy. And then we have other partners that do like the food prepping and whatnot. So, and then the fourth one, which I think is the most important, is mindset, right? Because if we want people to move forward with an optimistic look on life when these accidents happen, like they've gotta be able to go through the feelings and the emotions and like work through them, right? But also feel like, hey, there's more to life. There's a lot of the time when stuff like that happens, like your identity is largely wrapped up in the child or the spouse where it could happen. And, you know, it's like you have to be able to kind of create that new identity and move forward. So that's how we largely help families, is we want them to move forward. And the last time, it's been a couple of years since I've been able to do an event, just because I've been just trying to feed my own family, right? And because, as you said, Gary, it has been tough. And like this year has been the most profitable in the last decade that I've been doing this, right? So it sometimes takes that long. But we're planning on getting going again in 26. But yeah, the last event we did was in 22, and we put on this big like real estate event, actually, because I had a couple other co-hosts with other real estate guys. And then we did a big dinner gala with an auction and raised 60 grand, and we gave 20 grand to each family, and then gave each of them a half a beef. And I see those people on social media, and just like how much that's impacted their lives, just simple things. Um, so yeah, any questions on that? That's pretty much what it is.
No, and I love what you're doing with Tiny's Tribe, and you've obviously I mean, over the last 10, 12 years, I mean, you've built a really very impressive real estate portfolio and career. And thanks for sharing that with our audience.
Yeah, I think, I love real estate, but it's a tool in my mind to do more on the philanthropic side of things.
Well done. And where can listeners find out more about you and your company?
Yeah, you can go to cowboycapital.us. You can email me at joe@cowboycapital.us, or find me on Instagram or LinkedIn. I'm not on Facebook as much, but Instagram and LinkedIn, I'm pretty active. So
Awesome. Thanks so much, Joe. This is Gary Lipsky signing off. I'll be back next week with another informative episode on the Real Estate Investor Podcast. To all of our listeners, thanks for joining us. And if you like this episode, please head over to iTunes or Stitcher and like, subscribe, and leave a review, as it will help us reach more people. And if you'd like to learn more about what we do at Break of Day Capital, head over to our website at breakofdaycapital.com and sign up for our newsletter and fill out our investor application. We'll talk to you next week.